I think currency-wise, people feel the euro is cheap at the moment if you're dollar or sterling based. So you would invest in Europe for the currency overlay reason. I think the UK, I mean, London is, as Johnny knows, just attracting an amazing, disproportionate in a way, capital. I mean, it's just remarkable. But I think that will continue, and rents are obviously pushing on very strongly in London City, Midtown, West End, office and retail. I think the regions are obviously also re-rating, secondaries re-rating to prime yields. UK is probably in a good position, and the economy's recovering faster than I think virtually any other area of Europe. I think when you're looking at European economies, it's a very mixed picture, and you have the bond investors who are sort of the credit tourists who basically go round, looking at the dislocation and distress, and the capital markets are always ahead of the underlying economy and occupier fundamentals. And they were in the UK in 2010, they were sort of in Spain in 2011, they're sort of in Portugal and Italy now. Will they end up in Cyprus, Turkey and Greece? Who knows? But if you follow PIMCO, Oaktree, these big bond guys, I mean that's what they do, and they do it very cleverly and intelligently. But it's a macro play. So I think everything she would say. I mean, there's a lot of capital for European real estate from core to opportunistic, particularly opportunistic. I think there's more and more money coming into NPLs and distress in Europe at the moment.
I think that, London's in an extraordinary place in Europe, and I think that it is, it's come out as a truly sort of global city, and you compare it now to, to New York, Hong Kong, Tokyo, and I think that because of that, it attracts capital. We're looking at a situation today where perhaps the market is 80% foreign capital. That's a huge dominance of foreign players. We've forever, every week got new money coming into the market, so it's fueled by new money. I think Irina's right, you're seeing that new money coming into London, but it's also looking at other European centres at the same time. But there's no question that London is an easy win if you're an investment committee and you're looking to say, well, let's diversify our funds to another continent, to another city. London is it's an easy place to go for all the reasons in terms of efficiency and the scale of the market. So I think that some of the facts you talked about with the Chinese and the insurance companies, some of the things we see, what we so far have seen is the sort of tier one companies come into the market. As you will know, in China there are tier two, tier three, and there's a huge raft of insurance and then other kinds of companies that we think will come, perhaps not in the same scale, but I think they'll provide fuel to the market. I think London will still be at the heart of that, but perhaps you're going to see, a movement out beyond the absolute core, because pricing has become, really quite difficult for some in terms of driving returns. But then you've got to look at why they're coming. And I think, if you look at Taiwanese prime yields at 2.25%, 3.5% in the West End looks pretty good. And so, you can see why that's happening.